It was the second and the last day of the 10th Economist Nigeria Summit, an opportunity once again for stakeholders, policymakers, experts, analysts, technocrats, and even private sector players to bring to the fore the key issues affecting the nation in its quest to become a key player in the economy. Power and infrastructure.
The last 24 months, the progress have been just amazing, right, in terms of establishing the new industry for power. There certainly was a little bit of apprehension, and the best we could say, Nigerians were cautiously hopeful that we're on the right path. Now, 18 months, 24 months later, there certainly is a consensus, that of course the need is there. The consensus is clear as to what we had to do, which is to establish the roadmap. And if you look at the progress, they're incontrovertible, right? I mean, clearly, the progress is now irreversible in terms of what Mark even just articulated in the disposition of the government assets, the private capital that's come into the sector. You look at the investments now that the new owners are making in terms of additional capacity, in terms of some of the very basic things that are needed to actually revitalize the industry as we know it to be, as we know it could be, training, skills development, and all of that.
We're actually on that path, but the speed at which we are moving, I think, is actually the question. How far are we going to get there? How soon are we going to get there is the question. Now, key to that is actually the gas you just mentioned. At the moment, if you speak to any of the power developers, they will tell you that the major obstacle they are having at the moment is availability of power. In terms of power generation, Siemens have shown a very good example. We have taken a leadership role in that. We built the Geregu plant right on time and on budget, meaning that they've given more opportunities. We can actually work with Nigeria to build power plants at reasonable cost, on budget, and on time. But these power plants are not running to full capacity because there is no adequate volume of gas. In our own case, if you look at Geregu, for instance, we do not build power plants in anticipation that gas will be extended to the location. All the power plants we have built, gas are either already existing, and if they are not existing, we insist that there must be a concrete step project for gas pipeline to be built. So at the moment, we are actually not moving as fast as we move. Power plant developers are not moving forward as fast as they would have loved to do because gas is not available at the right volume and at the right location.
I think we also focus quite a lot on gas, and we haven't focused enough on alternative sources. And I'd like to talk in particular on two sectors. The coal sector, Nigeria has abundant coal reserves. We haven't done anything at all in terms of exploiting these for coal production. Lots of comparable countries, you go to say South Africa, you go to Poland, etc. They have huge coal reserves, they have coal-fired plants, they're working efficiently. There's no reason at all we can't exploit that. We have massive coal reserves along the Benue area, along the Kogi area, along the Anambra area. Each one of those areas could actually confidently support the 3,500 megawatt power plant. There's no reason at all we should not exploit that. Secondly, on the hydro side, we have ample hydro resources as well. We haven't done enough in terms of exploiting these. I know we have some effort at bringing onto the market Zungeru, bringing onto the market Mangala plants. If you take those two, and you take the coal side, and you put them together, easily you could actually create a 20,000 megawatt generation capacity system. So it requires significant work to push that agenda.
Starting from where he just dropped off, the energy mix as we see it in the medium and long term, unfortunately, in spite of abundant coal reserves and hydro availability, the energy mix, unfortunately, will be 80% gas, 10% hydro, and 6 to 7% coal. I would say that the power sector reforms and the revolution that is going on in the power sector, and I call it revolution because over a 3-year period, as you can see, investments in either purchasing or building new power plants over a 3-year period, we top $4 billion. So it's a lot of money coming into the power sector. And that has created some vast opportunities in the gas to power sector, which is where we play.
The Nigerian market and its prospect of becoming global competitive.
We focused on improving market integrity, on ensuring that the disclosure regime is the same that you would have anywhere else. We've been fortunate that as a group of regulators and with the market, there's been an emphasis to move to global standards. Today, listed companies are reporting under international financial reporting standards. We revised our corporate governance code, which we first issued in 2003 and revised in 2011. And some of you have followed some of the recent issues we've dealt with a listed company in Nigeria that had governance weaknesses, and some of the stance that we took in that respect.
And so if you look at stock market capitalization as a percentage of GDP, Nigeria is much lower than Switzerland, right? Singapore, the United States, for example. Not only that ratio, but also the amount of liquidity in those markets. Some of the other panelists are doing. But once that is there, then people, investors, global investors, and domestic investors will put money in that. That will unlock the unemployed resources in that particular.
In private equity, we were able to invest in the telecoms sort of, should I say, telecoms opportunity when it happened, the likes of MTN and the like, but they're still not listed today. Therefore, some of those investments, we've had to sell them privately. My sense is that if we had sold them publicly, we would have made a lot more returns for investors. If you look at the pension funds, under the current regulations, they can't really invest in sort of non-listed equities, unless it's a proper fund, like a proper private equity fund that meets certain requirements. Therefore, it means that large amounts of capital that is accumulating fairly fast is not sort of able to play in large parts of the economy. And frankly, it poses a problem, like this Mike said, on both sides. We have over $25 billion of capital looking for outlets, and we have opportunities looking for capital.
Let's just compare to the most developed stock market in the world. So US GDP is $16 trillion. Nigerian GDP before rebasing around 245, let's say it ends up at 300, but just in terms of how you think about it. So basically, US GDP is something like 50 times Nigeria. Now, market cap. The US market cap of the stock market is 20 trillion versus 75 billion for Nigeria. So 120% of GDP, market cap to GDP in the US, around 30% in Nigeria. But however, the most interesting statistic, where you see the gap, so GDP 50 times bigger, market cap 120% to 30, so 4 times bigger in terms of relative size to the markets, relative size to GDP. But trading volume, US average trading volume is about, daily trading volume is about $50 billion. In Nigeria is 25 million, 2,000 times. That tells you right there where the problem is.
And education, workplace skills and talent, key for the next generation.
One of the things we discovered is that a lot of Nigerian graduates have degrees that are not relevant to the economy. I mean, we're creating jobs as a nation, but our people can't take the jobs. So we end up creating jobs for other people from the West African region or other countries. And a lot of companies either recruit expatriates to come in, or Nigerians working in the diaspora who are called repatriates to come in and take the jobs. And so we wanted to find a way to match the graduates with the jobs in the market through a program that we call the conversion program. And that's worked successfully in some intervention project that we ran with Lagos State.
We're in a situation where we have 48% youth unemployment in urban center, about 50% in rural center. And so what that means is it's only the best that are able to get jobs on things like Accenture and P&G. So there is abundance of population, but businesses need to do more to mine the talents of that population. And so I see all of this from Accenture point of view, we see it as a business issue and not a CSR. Because we need to find the right talent that can help to further and fuel our growth.
If we deploy what they are doing into the larger population in a systematic way, We will impact the economy, not just through creating jobs, but the value that those guys will create and how they will affect the lives of other people, and then create an inductive effect through the economy and across different areas. It's a Latin self-interest. It's a national situation. And to the Nigerians in the house, my take is this. The day we have a national crisis on this, even though most of us have built institutions and we've built our businesses and we're successful by hard work, we will suffer because when we have it, it will be about who has and who doesn't have. It will not be about who stole or who went out to get. So we have to solve this problem, and anyhow that we need to do it, we have to all agree and deploy our resources to solve the problem. Government and private sector alike, running together.
There is a gap between what the universities are teaching now and what the employer is looking for. The graduate that comes out of our university is not work ready. There is no workplace ethics, all that the workplace itself, the real skills and talent that you need to deploy. What the graduates have is cerebral knowledge.
At the end of this two-day summit, it is clear that Nigeria is indeed Africa's destination for investment. It has an entrepreneurial society. It also has a demography of over 65% people who are between the age of 20 to 35. The real fact is that the private sector has to continue to engage, and the government has to set the policy and the framework to turn the growth prospects of our nation to prosperity.